what does the actual market look like today? Give me some not headline-driven news.
I want you to just have this snapshot. So, quarter over quarter, you could kind of benchmark yourself and benchmark us as far as the Jacksonville real estate market. So here's a snapshot. You'll see on the left here, that's where the chart is. So you kind of see where Jacksonville home prices are compared to what would be the predicted price. If home values went up at that average appreciation rate each year, they would be at that red line. And we're kind of messing around with the red line. The blue line are actual prices. They're just kind of dancing, hitting that red line and going up. That's very normal. Sometimes the blue data points go under the red line, and sometimes they come above, right? But what you don't typically see are large swings up and large swings down. So this is exactly what we predicted a couple of years ago. Yep. And last year as well, we said, you know what? We expect prices to normalize. Normalizing means dancing around that red line in that graph. And that's exactly what's happening. Overall, here's just the stats of the Jacksonville real estate market as of July 2024. Median home sales price, $366,000. Our home price appreciation is 5%, as we mentioned. Median days on market, 34 days on market.
It's not a lot.
Contrary to what you might think from reading some of these headlines. 34 days is a great market to buy and sell homes.
I mean, it makes sense. I get the sense that we've talked about this before. Sales velocity is down because there's not enough supply in the market.
Exactly. We haven't gotten to that.
So as soon as you put something for sale, it sells because people need it, right? Like we're undersupplied.
Exactly.
Yeah.
Exactly. And so these are the real numbers. We have a little under 11,000 homes in the Jacksonville real estate market as of August 1st. We had about 2,500 sales in July. Gives you 4.3 months of inventory. And of course, the foreclosure rate's not even something to be concerned about, but people have asked in the past. A normal market has somewhere around 10% of sales as being foreclosures. We're at 2.5%. And we've been pretty steady there this year.
Got it. To me, the thing that really sticks out is as sitting on the seat here of the Not Your Average Investor Show, co-host with a great co-host like yourself, GC, $366,000 medium home sales price. It's funny how my brain has shifted from having left Miami 5 years ago. And 5 years ago, if you would have told me a median home sales price, it was $366,000, I'd be like, oh my God, give me 4, right? But like the truth is that median home sales price in the 5 years that I've been sitting in this seat has gone up significantly. Mm-hmm. So like when I peg it to like, oh man, I feel like when I moved here, it was like 200,000. And now it's gone up that much. It's almost shocking, but it's also just like tale of the times. But if I were to zoom out and think, median home sales price, $366,000. I think the median home sales price in the United States is north of that, right?
It is, absolutely.
Yeah, so it's still I've put on like my lens of a local, but like I still think of that, and I still think of like how much I would have killed in so many other markets to have a median home sales price of $366,000, and it still seems shockingly affordable.
Well, and it's probably even easier for many who are listening right now to see this as very undervalued because a lot of our clients come from California, New York, Virginia, these very high-priced markets. You all probably look at 366, and that's one reason you started to reach out to JWB and say, hey, listen, I want to invest here.
100%.
Right? 100%. It's affordable.
Yeah.
Man, I've been in the lab lately, and I've been comparing the Jacksonville real estate market to every other market in the country. Yeah. And there are some amazing claims that we can make as a Jacksonville real estate market that other markets in the country just don't have. And that word only to me is such a strong marketing word.
I like to be different.
Yeah. Jacksonville is the only real estate market in the country that has these 4 criteria. Prices below the US median, rent price appreciation above the US average, home price appreciation above the U.S. average, and population growth above 2% over the last 5 years.
The only market in America that can say those 4 things at the same time.
Absolutely.
Underpriced, above average appreciation across rent, home price, and population growth.
You know it, baby.
That's pretty good.
That's Jacksonville.
Yeah.
So Jacksonville home prices are 13% below the U.S. median. Jacksonville has the fastest growing median incomes of any major city in Florida.
That's awesome.
Didn't know that.
Yeah, because again, it adds to this like sustainability of the buoy, right?
Exactly. Yeah. Exactly. We have the fastest growing population of any major city in Florida, and our population has grown over 5 times faster than the U.S. over the past 5 years. And this is before a lot of the stuff we spend time on the show talking about what's coming next in downtown Jacksonville and all of the great businesses that are moving here. This is just what's happened in the past. 5 years and what's happening right now. So even more to get excited about going forward.
So great snapshot of a very healthy real estate ecosystem. Underpriced homes, above average rent appreciation, above average home price appreciation, above average growth, along with all these like beautiful trailing indicators of, where we at in comparison to the median, the fastest growing median incomes, which to me is, like adding to this like level of resiliency. The lifestyle is going to get to keep up with this. And we're not just betting on people coming from out of town like Miami and Orlando. We are betting on people here continuing to grow and continuing to demand more and more in home prices. So GC, what's the outlook, man?
Yeah, so just sharing with you, I think Jacksonville real estate prices are likely to increase 15 to 20 grand next year. That is just based on normalizing of the market. That's taking our price right now and adding 4.9% to it. So it's very likely that home prices are going to go up, and 15 to 20,000. I think people need to hear that, because that means the same property is likely to cost $15 to $20,000 next year, just like right now is $15 to $20,000 higher than what it was 1 year ago. So this is where we see the market going.
I mean, I buy a whole bunch of stuff on Prime Day because it's like $15 off, right? Like this idea of understanding that this is going to go up 15 to 20K, and that being something that drives urgency, whether you are somebody like Venus who joins us, who's a young person that maybe she's thinking about buying a home in Jacksonville, or an investor that is here either looking to expand their portfolio with JWB or thinking about investing in their first portfolio with JWB, 15 to 20K price reduction versus what you would be doing next year. That's the first time that you've ever, on one of these market updates, shot a shot like that. Like, I don't think you've ever given like a concrete number of like how much you think it's going to go up over the next year. So I think that's pretty telling. You're a pretty conservative dude. And what I think of is like, okay, so there is, wait till next year. Is that the full opportunity cost?
That's a very good point, because if we started where we started in this presentation in the beginning, it was about fear leading to inactivity, leading to opportunity costs. So I want to define what the opportunity cost is of 1 year of inactivity in the Jacksonville real estate market. And it's not just that 15 or 20K. What we have to understand is you're not only missing out because the same property likely will cost at least 15 to 20K more, you're also missing out on the equity gain that you would have had if you had made that decision 1 year earlier. So the opportunity cost actually is $30,000 to $40,000 of inactivity in 1 year if you like this whole data and perspective way of thinking. And that's a lot. $30,000 to $40,000, making that decision to put that into your portfolio today and holding on to that for 10 years, 20 years, maybe making multiple decisions and adding multiple properties to your portfolio. That may be the difference between retiring comfortably or maybe not retiring comfortably, or having to come up with backup plans to retire comfortably. So 30 to 40,000 is a lot. And I've just spent so much time on the side. Maybe this is why I'm getting a little bit more vocal about it now, is I've been investing for 18 years. And throughout that time, there have been times when my business partners and us here at JWB have felt very differently about how the market was going to perform, maybe over the next 1 year, 3 years, 5 years. And we haven't always been loud about it.
Yeah.
And I have seen investors make other decisions that didn't make a whole lot of sense. And after now helping thousands of investors, we have generated over $300 million for our clients. Those who listened to us, they might have had to listen a little closer back in the day. It wasn't so loud. But those who have listened to us have set themselves up financially to a place where they've built a better retirement account. They're sending their kids to college. They're able to give to charity like they want. They're able to have time like they want. I've seen all of this. And so helping people step away from the fear, past the inactivity, taking action at a time here where data and perspective would lead you to a certain way of acting, is something that I want to help all of you do. And by doing this, I think you're going to make a decision that's going to help you take strong steps towards financial success. The only thing it's not going to help you with is explaining it to the rest of the world. But I've learned in my journey that when I started my company, people called me crazy. And as we've been successful over the last 18 years, they've never called me smart. for many years,
Only somebody here calls you genius. All the
you
time.
call me genius,
Yeah.
but for many years, all people called me was lucky.
Mm.
If you're looking for people to call you smart, it's probably not going to happen if you're listening to the general public.
Yeah.
So that's my way of thinking here, that a decision today can set yourself up financially, and the data and the perspective is really telling.
It's interesting to think of it as opportunity cost, right? Because if I was to say my same example as before, I'm already seeing as faulty. Because if I'm like, oh man, if I can get like $200 off of a TV on Amazon, that's $200 in my pocket, but that TV is not going to go up by another $200 the next year. So it really is just that, right?
Exactly.
So this idea of like not getting in now at 15 to 20K below, and the fact that you actually gain that 15 to 20K doubles the opportunity cost is very real. But I think you have even more to this, GC. It's not about being lucky. This isn't like a guess. You have some real thinking about this of like, we haven't even spoken about interest rates going down, which the Fed has all but tattooed it on their foreheads.
It's a very good point. And we as a country don't know how to act in an environment where interest rates are high and the Fed has said they're coming down. There is a huge opportunity as an investor to make smart, wise financial decisions that will put you in the driver's seat taking advantage of this. But we just don't know it. It's been 40 years since that happened.
Yeah.
And people aren't thinking about it, but that's the place that we're at.
So let's
right now.
Talk us through how you think about it.
Well, so I started to put some numbers to this, and what we have to realize is that people make decisions in real estate based on monthly payments. Okay. So when your price is one thing, your interest rate goes up, your monthly payment then goes up. And if we have already seen that we've had roughly 28,000 sales that will happen here in 2024, to me, that is verifying that people in Jacksonville are comfortable with that monthly payment. And the people who are buying in July largely locked in their interest rate in April, in May. And at that time, those interest rates were 6 3/4, maybe closer to 7%. That's what they were thinking at the time they either put their house under contract or started to get into the house buying process. They started to run their numbers based on those interest rates. Well, that payment at that time was enough. It was affordable enough for people to make the decision to buy a house. So if we start to think about what interest rates can do on a marketplace when they go down, and you already have all of this data to show that people are buying at a certain payment, I started to run the numbers. And I'm saying, okay, well, what if interest rates, while they were 6.75% for those folks who were buying in July, what if they came down to 6.25%? How much could the purchase price rise and keep the monthly payment the same? And home prices could go up significantly then. And I said, well, what if they go down to 5.75%? How much can home prices rise with the monthly payment being the same? Because people make decisions on monthly payments. And it comes out to another 11%. So even if you put all this other good news that I've shared with you off to the sidelines, and you just said, apples for apples, how much could home prices rise if interest rates come down? Home prices could rise another 11%.
On top of the 5% that you already expect.
Well, I mean, it could. I don't know how much they're going to go up.
Yeah.
I'm just saying that I'm expecting at a bare minimum, I feel really good about telling you guys that I see the market normalizing. And normalizing to, if you actually break down the numbers, is prices are going to be another 15 to 20 grand or more next year.
Yeah.
And then on top of this is another thing to consider. You know me, I'm always conservative.
Yeah, that's why.
You know me.
That's why. Yeah. That's why I like.
So I'm lumping on
you're
like
coming
all
off,
of the other big things that could be happening that could make $15,000 or $20,000 of growth actually be more.
Yeah.
You know.
And in your philosophy of under promise, over deliver, I know that what you're thinking to yourself is like, if I'm going to say 15 or 20, I'm going to expect more than this because I sure as hell want 15 to 20 to happen. So you're just kind of like peeking behind the curtain of it's not just normalized. There's also more positive forces that could get it to overperform. And therefore you're kind of like showing behind the curtain.
I know you guys are going to hold me accountable to this number.
Yeah.
And I'm excited about it.
Yeah.
So that's another $40,000 of potential equity gain for homeowners who bought a house today.
Yeah, that's a big deal, man. So give us some advice, GC. You've been coming strong all day. I want you to land the plane forcefully here.
There we go. Here's the deal. Many people are asking, should I invest now or should I wait? You should invest now, right? You've seen the data, you've seen the perspective. we are likely having lower purchase prices today than we would in the future. $15,000 to $20,000 of appreciation would be normal from this point till next year. There's a lot of reasons to believe that it could even be higher than that based on the market that you're investing in and based on what interest rates have already been signaled to do. They have been signaled to come down. We would expect them to come down at some point. Properties are already rented with JWB. They are cash flow positive, almost without exception. You'd be buying an asset that is already rented, has a long-term lease in place, and is cash flow positive from day one, is paying for itself. And then JWB is still doing these incentives. We did incentives in July, and we held it over for the next 20 contracts here until 20 properties go under contract. And it's still available for those who want to take action. But long story short, JWB is buying down your interest rate so you can buy today with tomorrow's interest rate, which we would expect to come down. Recent JWB clients have been closing at around 5.25% interest for their JWB investment properties. And I don't want to gloss over this maintenance incentive that we are still honoring. This is $4,000 to $6,000 of maintenance costs are covered by JWB. If you buy 3 properties, there's 3 properties there that would receive, call it $4,000 to $6,000 each of us covering your maintenance costs for you. All of these incentives are a factor of interest rates being higher than we all want. And so these incentives are not going to last. As you see interest rates start to come down, you're going to see these incentives go down as well. So for all of the reasons that we talked about today, if you're considering investing in a property, today is a great day to do it. If you're not a client yet, go to chatwithjwb.com. If you're a current client, just reach out to your portfolio manager. Now's a great time to make a decision. I know you'll be happy you did it.
Talk up through the decision a little bit more clearly here, GC. This is a current available property, purchase price $225,000. Are we thinking about like a 35% down payment here?
Yeah, absolutely.
Is what Jag is asking. Like, what is the down payment these days that makes it cash flow positive?
For each client, it's something we'll work on with you. Many clients are putting 35% down. For this incentive, you can actually put 25% down and make the numbers work to be cash flow positive as well.
How have you not said this before, GC?
It's like keep
What's going on, bro?
Keep a little close to the vest.
Okay, so
people to get on the phones and be excited.
So with under promise over deliver. So with the incentive right now, 25% makes it cash flow positive year 1.
Yeah,
that's hot.
Yeah. So a lot of reasons to take advantage of that. So this is a great way. I want to. Sometimes we talk big picture here. This is what you'd be investing in. Either a new construction property like I've shown here. We also have renovated homes. Either way, what you're getting is a return of maybe 9.5% to maybe 10.5% for your rate of return, cash flow positive. You can see the breakdown here of your different profit centers, but over a 10-year hold, what you'll find, like every other JWB client that has experienced this, is that the largest part of your wealth pie will be home price appreciation. That's why it's so important to invest with the right team who can help you see what it feels like to own a property for 10 years or longer than that, so you can take advantage of it. And of course, invest in the right market, which is what we've talked a lot about today.
Love it.